Hi, and welcome to Triangle Spotlight. I'm Suzanne Lynn, and today we're talking with a local guy here in Mount Dora. His name is Jim Green, and he's with Union Home Mortgage. And Jim, I'm looking at your screen because we're also doing this through video, and I see some Clorox in the back, and that just makes me feel better. Even doing this through video and digital, somehow just knowing there's Clorox and there's some sanitation involved with what we're going through. This is very timely. It's March of 2020.
It's definitely a time for being as clean and cleanly as possible and disinfecting whenever needed.
Absolutely. And of course, we're referring to the coronavirus. That's we feel like at this stage, and again, it's March 2020, really probably haven't seen the worst of it. So we're talking to Jim and excited to find out how is this affecting mortgage rates, what's happening in, buying homes, refinancing, and things in that area.
It's affecting everything and somewhat in a positive way. I think, refinances have, I think we're trending this way anyway, where we're going to start seeing a slowdown in the economy. The people that I listen to, a lot smarter than I am when it comes to this, but I think we had a great run and eventually you have to have a slowdown. I don't think it was going to be anything dramatic. Then the whole coronavirus thing came up, and I think that's just kind of starting to accelerate the process. Now, the good thing on that is, our Federal Reserve does a great job trying to keep the economy, going strong, but they can only do so much. And what it's done, though, is to help is we've started to see a pullback in interest rates. Now, that's a great refinance market. And, we're seeing rates, and I've had customers that I've locked for 30-year loans in the low threes. Mm-hmm. I've had on 15-year loans in the high twos. So it's a great opportunity to refinance. I think personally the purchase market at this time, I think is going to tend to slow because people are concerned. Do I buy now or do I wait till things settle out?
There's so much uncertainty. Yes.
Absolutely. So as long as there's uncertainty, people are gonna wait until some of that goes away. So I think we're going to see a slowdown in purchases. We're definitely seeing a pretty dramatic increase in refinancing. And honestly, basically sometimes when you get rates, you're probably looking at 90% of all homeowners in the country are eligible to refinance.
Huh. Wow, that's shocking.
Yeah, it is.
Yeah.
Because I don't know what the average interest rate is. I know what I've done over the last, 10 years. But, most of them high threes, low fours. If you're high threes, low fours, it's a time to refinance. Now,
why is that the time to refinance in addition to it being a low rate? Is it because the goal in uncertainty is to try to make sure you've got, 6 to 12 months expenses and having that cash on hand? Is that what you mean?
Yes, it can be a win-win situation. You're going to refinance and hopefully get a lower interest rate. Mm-hmm. And we'll give a little bit of a caveat on that and some thoughts on that in a minute too.
Okay.
But over the last, 3 to 5 to 7 years, we've built as a country, we've built a tremendous amount of equity in our properties. Mm-hmm. And, the thing that I'm advising my clients and that I put on social media, we need to make that equity work smart for us at this time. And, we can do two things. Right now, I think it's just a time to be conservative. Don't get greedy and wait on that bottom interest rate because other times will come down the road. But we need to take the equity that we have, consolidate the debts that we have as much as possible. And I'm talking even throwing in car loans, anything that you can use that equity for. And then at the same time, pull another, like you said, 6 to 9 to 12 months of reserves out. This is when families need to be sitting down and figuring a budget. This is what we need to survive. Pull that money out, put it in the bank. So if the worst case comes, and I don't think it's going to.
Sure.
But if the worst case comes, and we see unemployment jump pretty dramatically, we see a lot of people out of work. You can look at it and say, do I have enough money in the bank right now to cover my monthly expenses for the next 6 to 9 to 12 months without a dollar of income coming in? That ability is there through the equity that we've gained just by being a homeowner.
So you're saying don't get hung up on the lowest. Don't sit there. I've got my phone here. Don't refresh. What's the interest rate now? You know, we can get obsessed with that when you're missing the bigger picture from what you're saying.
You can't. Everybody's like, you know, the one misconception, the biggest misconception is, you know, the Feds come out over the weekend and they cut interest rates to 0.25%. It's like, oh, interest rates are zero. No, it's totally unrelated. What the Feds do have no correlation to mortgage rates. The Federal Reserve is the overnight. Yeah, it's the overnight lending rate that they lend to banks. It's all affecting short term. The short term money is what really helps keep the economy going. You know, lower credit card rates, lower bank or car loans, lower personal loans, those type of things. This is what the Fed is helping control.
And that's not mortgage rates. That's long term.
Mortgage rates are long term. What the Feds do has nothing to do with long term rates, with mortgage rates. Those are based on mortgage-backed securities, which we'd have to do 2 or 3 other shows to get into how.
And it would be so over my head. It would probably be more than that. Yeah, sure. I get it though. Don't get hung up on the fixes they're trying to make for a short-term economy, opposed to refinancing our houses, making those long-term decisions.
Exactly.
Okay.
Exactly. So the 2 things that I'm telling people right now: get an application in place. Second, get a target rate in place, but have a variance of where you're going to be at. It's great to say, and the reason I say get a target rate, because we're seeing such a volatile market that we're seeing 100 basis points, 1 full percent change in interest rates within a matter of hours. And it's not to say that your target rate will never come, because they do. I had one happen to me yesterday, but within a matter of minutes, it was gone by double.
So, Jim, is it kind of like the stock market when you have like a Charles Schwab? You can set rates, and then as soon as it hits there, you grab those funds.
Yeah, to a point. Our systems aren't set up to where I could put that in and say, hey, if we hit this, it automatically locks. That's something I have to do. And that's something that everybody's mortgage professional can do. But if you don't have an application in place and you call up and say, hey, I see that rates are really dropping and we're in a good position, I think I'd like to do something and refinance.
Get in line, right?
Get in line. And by the time I get there, we'll have seen probably 8 to 10 rate changes, good and bad.
Okay.
So nothing ventured, nothing gained. For our company, we don't charge money to put an application in place. I have it ready. I wait. I check. I watch the market hourly. I have an ongoing update on my screen, not every day. I watch it as I see it, when I think it, and I check.
Sure.
So for those people that have something in place,
they know what they're shooting for. Sure.
Right. And I was just going to say, and I advise them that, depending on where we're at, if it doesn't look like we're going to, again, have a plan B. Don't get greedy. It's not a time to get greedy. One more thing.
Sure.
The other thing that I think it's a twofold situation. Right now, we need to do what we need to do that makes financial sense. Maybe the best financial sense right now is to say, rather than trying to bottom out, let's just do something that makes sense, but at a point where I can pay a little higher interest rate, but the lender pays my closing costs or a good majority of them. Because the thought process is right now is we need to conserve, we need to consolidate. The second step will come when things settle down. And, my opinion, when this comes out, and if we came out in 3 weeks with an antivirus or a vaccine for this, it's just going to jumpstart right back in there within a matter of weeks.
Sure.
So that opportunity will come down the road for a second time to refinance. And at that point, I think we'll be in the opportunity to where we can really start to look for that bottom rate. But right now, if you can do it, pay a little bit higher rate, half to a quarter. It might be $40-$50 more a month, but you're getting virtually a no cost loan. So It's not costing anything to do this. Then look at it down the road but you're putting yourself in a great position. Then we'll look at doing something down the road where we kind of really sit back and wait for that bottom rate. So
keep your eye on the big picture. Don't get caught up in the minutiae and the details of the small, because you could be missing long term when things start turning around. It feels like the world has just completely come unplugged and plugged back in for a hard reboot. I mean, we are finding all kinds of new normals, and areas that we never even could wrap our minds around that we would be at. So as we're moving forward, this might be a really great time to consider downsizing and saying, let's not take anything off the table, because this makes sense now in a whole new world that we hadn't thought about. Talk about downsizing.
It does. For many of us, as you know, I think the baby boomers, I think I saw something. Aren't the baby boomers now reaching that point of being 60?
I believe so, yeah.
So the baby boomers are reaching that age of 60. My kids are grown and out of the house. My wife's son is grown and out of the house. We've all reached that point. We don't need these 3,500, 4,000 square foot, 4-bedroom, 3-bath houses. At the same time, those houses, again, with everything else, have just created a massive amount of equity.
Mm-hmm.
It's time to sell, downsize to something that's more comfortable for you and your spouse to live in a 1,500 to 1,800 square foot house. You've got all that equity that you've built over the years. Downsize it. You're going to downsize your payment. You're going to downsize your expenses. And now something that I learned a little bit about a couple of years ago back with a friend of mine did a seminar on it. A great possibility of something to look into would be take the difference in a reverse mortgage and get yourself mortgage payment free. Okay,
see, that word scares me right there. I don't know why. Reverse mortgage. I don't know why that scares me.
I'm not an expert. We don't do them. I know a little bit about them, just enough to, as they say, to be dangerous.
Okay.
But the reverse mortgage is not as bad as what a lot of people think. And for the right person, it's a great situation where, you pull a couple $100,000 out of equity when you sell your house, and you go look for that house that's $250,000 and you've got $50,000, you could potentially do a reverse mortgage. And for the, you put the $200 down, you do a reverse for the $50,000, you're mortgage free the rest of your life.
That
mortgage
actually makes a lot of sense. Yeah, that makes a lot of sense. Yeah.
In the right situation, it does.
Sure.
But even without that, you have a house that is worth $425 after cost, you net $390, you owe $200 on it. Now you've got $190,000 to $200,000 to play with on a purchase. Go buy that house for $250,000. You got a $50,000 mortgage. You're in much better shape, long and short. I look at everything as what's your short-term financial goals and what's your long-term.
Sure.
This is a great long-term goal. I've always been one of those that I don't want a house payment in my retirement years. I want to enjoy life.
Sure.
This sets you up to do that.
Absolutely. And then for Central Florida, this is a really important topic also, 55 plus communities with manufactured housing. How does that play in? Are they considered like mobile homes where, at least when I was young, you weren't able to mortgage them? What's the situation for that?
That's a great question, because this is a great area. This is an area that is a lot of homes and a prevalent home in this area. In a standard mobile home park, those properties do not qualify for any of the lending programs through either Fannie Mae, Freddie Mac, or any of the government agencies, because the way that the purchase of the land is structured, you're not technically purchasing it. It's a long-term, like a 99, 100-year lease. Okay. So on a standard program or a standard mobile home in a mobile home park, those are not financeable properties. The two options for those is either cash,
okay,
or you go to a bank that has a portfolio product where they're lending their money from internally. The one difference is a 55 plus. There's an addendum that goes with that purchase that allows all the programs, Fannie Mae, Freddie Mac, and HUD through FHA, to finance those properties.
No kidding, for 55 plus.
55 plus only in a mobile home park. Otherwise, it has to be mobile home on a separate piece of land.
That could be a really reasonable, wise choice, especially during what's happening with the economy, getting cash on hand, downsizing. You're accomplishing a lot with one stroke.
You can.
Oh, interesting. Well, what are some products that people here in our area, Central Florida, what could they talk to you about?
All the products that are available. We Central Florida has a great area for, because there's a lot of rural communities. one of my favorite products in the industry, with some restrictions that has to be in a qualified area, and it does have some income restrictions, are the USDA loans. These are the loans that are insured and by the government. But this is, along with VA, the only true no money down loan available. So you can go into this. There is no investment requirement by an individual to purchase through USDA, as long as everything qualifies.
Okay.
And I've done them where literally the buyer ended up getting back his deposit, his appraisal money, and his credit report fee at closing, and walked out of that closing without $1 out of his pocket to make the purchase.
That's incredible.
Great program. Great program. And
it sounds too good to be true.
Well, I said for years, I thought it was funny. I said for years, this is the best product I've never done. And then I did one and I'm going, this is probably now the best product that I know of.
Right.
And the other nice thing is it's a zero money down. And with the exception of VA that has no monthly mortgage insurance, it has the lowest monthly mortgage insurance of any program out there. And
what's the qualifications for that? What type of age, demographics? What do you need to know?
There really is no age demographics. It has to be in a qualified area. Now they have kind of shrunk the areas, and there's just it's a map that you check. You put an address in, you check it. Either the property is eligible or it's not.
Okay.
And there's no exceptions. It is or it isn't. And then with that, there's some credit score requirements. Generally, it needs to be a minimum of 640, preferably 660 or higher, because the USDA, these go through their approval system. And then depending upon the number of in the family, there is income restrictions. But here's the cool thing. Worked on one for a couple last year. They had family of 5. They were looking at a house that was in a USDA approved area. I think the price on it was $280. The income limit for that family was around $109 a year. And they would have qualified, and they qualified for a no money down loan.
Wow. Wow. That's great to know. There's a lot of things that change, probably every 5 years or so with a mortgage company. So it'd be worth friends reaching out to you and asking, hey, here's my situation. What do you think of this? Is there something we can do, or should I just stay put? I mean, you seem like an honest guy. You're going to give them, the truth with their situation and what you feel is in their best interest.
Yeah, absolutely. When I kind of go back to when the housing crash in 2007, 2008. And, you kind of think back, and I had done it then for almost 25 years, 20 plus years. And I thought, well, do I want to kind of ride this out and see what happens, or do I want to go look at another industry? And I didn't know how to do anything else. This is all I know how to do. Mm-hmm. So it's like, I'm going to ride it out. And I've got, depending upon the outcome of where we're at now and where my 401k is and everything, I'm hoping I got 8 or 9 more years and then it's time to retire. But
mm-hmm.
this is what I've done my life. This is what I'm going to do the rest of my working life. And it was kind of funny because I was in networking groups and we had to develop a tagline. The one that I've always used is your hometown lender for life, because I want to be that lender for life, because it's not what's in the best interest of right now. It's what's in their best interest down the line.
Yeah. And it's such an uncertain time. We need to know that there's somebody in our neighborhood that we may run into in the grocery store that we feel safe giving us our best financial advice going forward, because homes, remortgaging, interest rates, these are all really big decisions on top of a very volatile time in the economy. So I'm so glad that you're here. I wish we had more time. We have a whole lot more we could talk about, but we're talking to Jim Green from Union Home Mortgage right here in Mount Dora. You want to give me your website?
It's www.unionhomemortgage.com/jgreen.
Okay. And it's unionhomemortgage.com/jgreen.
Yes.
So yes, very good. All right. Well, we're glad that you're here. Thank you so much for your information. And we hope that you hear from some friends and you're able to help them out during this crazy time.
I appreciate it. This has been great. The time flew by. It seems like it's been we've only been doing this for a couple of minutes, but I appreciate it. And hopefully I brought some good information and helpful information to your listeners, and anything I can do to help anybody out. And advice is always free, and I'm always glad to give it.
Thank you, Jim. Have a great day. We'll talk to you again.
Thank you.